G'day folks, welcome back to another update for the S&P 500 and the NASDAQ. Now the chart is showing cautiously bullish momentum. We'll include some backtesting in our results to prove the trading strategy. So don't forget that like and subscribe button to support the channel. As of today, April 30, S&P 500, the first quarter earnings growth stands at 10.1%, surpassing the earlier forecasts. HSBC has reduced its year-end target to 5,600, citing slower economic growth and tariff pressures. The index has declined 6% year-to-date with concerns over high valuations and potential earnings downgrades. For the NASDAQ, first quarter revenue grew by 11%, driven by strong performance across divisions. Earnings per share increased by 69%, reflecting robust financial results. Despite gains, analysts caution about high valuations and potential market volatility. So we always start with the long-term trends and looking at the monthly first. We've actually broken below the moving average of the CCI, giving us a bearish momentum. Even though the price is still somewhat above the moving averages, it's actually broken down with that strong wick to the downside, hitting our 23-38% Fibonacci retracement, and that was a result of this bearish divergence, very long-term bearish divergence versus high highs on the price. On the weekly, now that's been bearish for a number of weeks now, since around about the middle of December 2024, and it's finally broken into that moving average band on the weekly weeks, but still well below the moving averages of the price chart. And again, we had another bearish divergence here, and that broke down as well. On the daily, it's actually, we drew this diagonal descending trend line, and you'll notice here it's actually pulling back towards that, and it may well hit that and actually fall further to the downside. Notice the CCI is above the moving averages, and so is the price, but again, it's starting to pull back slightly. And our CCI 1500 down here, our longer term trend, which helps smooth out the CCI 150, is still giving us a somewhat bearish momentum, but notice it's actually starting to level out a bit. So again, we might see a bit of a consolidation in the near term on the daily. If we go to the intraday chart, we've got here the 1 hour chart. Now again, you would have taken predominant long positions from that, ideally this area here. This one is probably a bit of an early break, but notice the price is below the moving averages. So a bit of a cautionary area to go long. I'll show you the back test in a moment. But first off, showing you on the 1 hour time frame, if you are holding long positions, you may want to take your money off the table because we're showing a bearish divergence, lower highs on the CCI versus higher highs on the price. Now this can pull back in any period. We don't know exactly how far it's going to fall. So if that's assuming it started falling from where it is at the moment, we expect it to come down at least at 23-38% range. So if I was to draw a Fibonacci range to that point, you can see there it's at that first area is at 23-38% range. But if we pulled it back right down to this level, you can see that 23-38% range is even a lot lower. Now, there's no guarantee it's going to bounce off that 23-38% range. It could actually keep falling further. So we take it one step at a time. And what I like to do is take it back to that earlier range, and that'll be the first level. Now it could bounce from there, like I said, or it can actually fall further. If it falls below that, then we're going to start measuring these minor Fibonacci ranges, and if it falls much further than the 61%, then we start looking at the wider Fibonacci range to see how it's performing on that level there. So basically what I'm saying is to take one step at a time. We can't conclude anywhere from at the moment where it might pull back to. Now in terms of a back test, what I've done here, let me just get rid of that Fibonacci. Again, like I said, you would have gone in direction of the higher time frame. So ideally you want to go long when it breaks above the price and the CCI, and that would have been somewhere on that candle there, roughly one of those candles on those days, and that would have been roughly around here somewhere. I've put in the back test to this point here because you'll notice here we've got when it broke above there, that coincided with this area on the 1 hour time frame. You'll notice here the price pulled back below the moving averages on the daily, and that's why here you would have had a bit of a drawdown on your profitability. If your baseline is 100,000, that was your draw line, and that was the average down approach. And what I've got up here is a stop loss approach, and again this is basically looking at a 3% profit and a 5% stop loss. And the same applies here, 3% profit take and a 5% when the price drops by 5, we average down when the entry parameters are met. And the entry parameters are met, same as what we look at on the daily, on the smaller time frame. when the price is above the moving average and the CCI breaks through that moving average band, that's where you enter your first trades, and you close it out with a 3% gain. And this one, it applies the same entry parameters, but it stops it at a 5% loss. So you can see there, this one actually, if your baseline is 100,000, and I use 100,000 when I'm trading, for example, Japanese yen, that goes in the hundreds of thousands sometimes. You can see that if the baseline is 100,000, that would have dropped below, and you would have had a drawdown of about close to $200, $150 at that point. And had you gone in, like I said, at that point there, around this area, that's still, you'd be roughly about break even, maybe $50 down at the moment. So again, the average down approach is showing dividends compared to the stop loss approach in this case. Now looking at the NASDAQ on the monthly, we've also got another bearish divergence similar to the S&P with higher highs on the price, and that actually broke down similar to the S&P with that wick on that current month's candle. It broke down into that 23-38% Fibonacci range. So at the moment, the CCI is showing a bearish momentum, even though the price is above the moving averages, so somewhat of a neutral positioning at the moment on the monthly. On the weekly, it's actually broken down below the moving average of the CCI and the price, and that was a result of this bearish divergence. That initially hit our 23% target, and it's actually fallen a lot further. You can see there, if we drew a Fibonacci to that point there, that was a 100% retrace. It's actually fallen below that. So similar to what I was saying before, this is on the weekly. If we were to draw a Fibonacci from, let's take it from that high. So that was the initial drop. You can see there it's broken below the 100%. So let's now take it to that level, and it's also dropped below the 61% on this one. So what we do now is just to see where it might end up, take it down to that significant low. You can see there it's resting, bounced off that 50% just, and again, if it falls much further than that, then it's going to be open season in terms of a down slide to the further to the downside. That's on the weekly. On the daily, again, it's bounced off this support and it's broken up into a somewhat bullish momentum at the moment on the daily. Our CCI 1500 is also starting to turn green. You can see there live, it's sort of fluctuating pretty much sideways at the moment. And it's actually hit this diagonal descending trend line. Now this could actually, the price could actually start trending down along with this trend line. So we'll see how that goes in the coming days. If we go to the micro level, the 1 hour chart. So again, taking long trades predominantly. And if you're going long during this period, again, similar to the S&P, you want to probably take your money off the table. We've got a bearish divergence here versus higher highs on the price. And what I was saying before, we take it one step at a time. That'll be your first level of resistance at that 23-38% level. Notice here also it coincides with that descending trend line. And if it breaks through that, then we start measuring at these minor Fibonacci levels. And if it falls below that, then we take it down to that level. So we'll take it one step at a time. But at the moment, it may have a bit of a retrace. And again, we don't know how far it's going to fall. Now, in terms of a back test, so take long positions only. And again, I've started it back here where the CCI broke above there, but the price is still below the moving average. In this case, the average down approach actually showed a good result. The stop loss approach is still negative throughout the whole period. And with the average down approach, let me just get rid of that. You can see there it averaged down a few times. And if you're trading the NASDAQ on this one, a dollar contract, this is Aussie dollar, you'd be reaping today about $4,300 as we speak, and that's still in play. But again, if I was trading this at the moment, I'd probably be closing my positions because of this bearish divergence. We don't want to be caught with a sudden spike to the downside. So if you're new to trading, we're now including a weekly video series called Pete's Investing Plus One as part of the Pete's Investing channel. The Plus One videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. And if you enjoy the content, help me keep me motivated to keep doing these videos, to subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Think of it as sitting down with me over a cup of coffee. Thanks, and talk to you in our next video.